Hey guys, Jose Luis.
Greg Falzoni.
And Mitchell Sema.
And we are your mortgage guys. Today we're going to talk about the most frequently asked questions we're getting in open houses. You're not going to want to miss it.
The number one question we get asked is, what is the monthly payment? As we dive into this, it's important to know what makes up the monthly mortgage and payment. To start with, it's the principal and interest, and this is your monthly payment based upon your interest rate and your loan amount. Next is the homeowner's insurance. In California, as of late, it's been a little more expensive and difficult. We're also going to include the property taxes. As a rule of thumb, in California, we're going to use 1 1/4 as the annual tax rate, but this will vary from home to home. Lastly, if you put less than 20% down, you will have private mortgage insurance. And if you buy a home that has a homeowners association, you will have homeowners association dues.
People always want to know what mortgage rates are, and I'm happy to answer that question, but it's important that we make one distinguishing factor first, whether or not you're looking at points or no points options. Points are an upfront charge to permanently buy down your interest rate. For example, a 1-point charge on a $500,000 loan would cost you $5,000 upfront. It's important you know this and distinguish this when you're shopping for rate, because somebody might tell you they have a rate at 6.5%, but if it's costing you 2 points, you might be better off taking a slightly higher rate, 6.757%, and saving that cash up front. Ultimately, it's all about what you as the consumer want to do, whether it's save money on a monthly basis or save money out of pocket at closing. Also keep in mind that any mortgage loan is going to have closing costs associated with it, whether you go with the no points or the points option. Closing costs are generally going to be 2% of the purchase price of the home. And also remember that if you're impounding your taxes insurance, meaning you want one all-in monthly payment, we have to set aside a reserve account for that, and that's going to inflate those numbers to above 2%.
A frequently asked question that we get is, are there zero down programs? Yes, there's DPA programs, down payment assistance, that can help you with the minimum down payment to buy a home. It's a great way to get into a home when you don't have down payment. However, there's no such a thing as a free lunch. DPAs are normally in the form of a repayable second mortgage. They sit on title and they need to be paid off when the home is refinanced or when you sell the property. There is a particular FHA grant program that does not require repayment, and the DPA does not need to be paid off. DPA rates are typically higher than your standard FHA loans and conventional loans, and underwriting guidelines are typically tighter. If you have the down payment, it's going to give you an overall better rate and a lower payment. Plus, you're using your down payment towards your own equity. To recap, if you're payment conscious and you have your minimum down payment, a DPA is not a good fit for you. If you don't have the minimum down payment, we could review your situation and see if a DPA program is a good fit. And we can talk about, after making 6 payments, how to streamline your loan in 6 months. Hey guys, today we covered the 3 most common questions that we get at open houses. Of course you may have other questions, and feel free to reach out. We are here for you.
And don't forget to like and subscribe.
And we'll catch you guys on our next video.